Hi folks, welcome to today's Bobcast. I'm Bob Benny.
I'm Jessie Thompson.
And we're both certified financial planner professionals here in Lincoln, Nebraska with Bob Benny Wealth Management. Today we're excited to get to talk about the big beautiful bill that just passed last week. And it truly is a big, beautiful bill. It's not really an exaggeration because it's going to help individuals, it's going to help the economy, and it's going to also help the stock market. We're going to do this in two parts. Today is part one, and next week is going to be part two.
Yep. So to get started with part one, taxes are going to be lowered for individuals pretty much across the board.
Yeah, there's larger standard deductions for everybody, and the marginal tax rates that were lowered back in 2017 and scheduled to go back up this year in 2025 because of a sunset provision were made permanent, and that's great. So the great, part of the great news of this bill, this big beautiful bill, is that your taxes are not going to go up, and had they not passed this, your taxes were going to go up. So in addition to that, like she said, it's a larger standard deduction for everybody.
Yeah, and that standard deduction was something that was also done that Trump did in 2017, where he made the standard deduction much bigger for everybody, and that's going to continue to rise with the cost of living as well. And so something right now, if you claim that larger standard deduction and you give to a charity or give to your church, you don't get to deduct what you give. You can only deduct if you are itemizing your deductions. And a lot of people, maybe they give and they don't really have a bunch of other deductions, so it doesn't work out for them to itemize. It's a better deal for them to just take the standard deduction. But now you can take the standard deduction and get an additional deduction of up to $2,000 if you do give. So that's a nice little thing that was added as well.
Yep. In addition to that, and some of you have probably heard about this, seniors get a special, it's called an above the line deduction of $6,000 for an individual and $12,000 for a married couple. If they're, depending on their income, under $75,000 for an individual, under $150,000 for a married filing jointly. And this is the intent of this. It's their way of making it so that Social Security is tax-free, federal tax-free. And it's predicted that about 88% of Social Security recipients are going to benefit from this and have totally tax-free Social Security. So that's great news.
Yep. And another thing is that for people who do itemize their deductions, there's a SALT deduction, a state and local tax deduction, that was previously, I think, $20,000 was the limit, and now that's gone up to $40,000, so people can deduct more of their state and local taxes too.
What are some other things that we're not gonna detail here?
Yeah, so some other broad things are, you've probably heard that tips and overtime are supposed to be tax-free. The way that they're doing that is that they're giving a really big deduction to people on tips and overtime with the intent that that will reduce that income so much that it's tax-free. There's expansions for health savings accounts. If you utilize those, there's expansions for who is allowed to utilize those and contribute to them and what you can use the money for. There's also child tax credits are something that was made permanent. That was another thing that could have been sunsetted. That was made permanent, and they were raised a little bit and will continue to go up with the cost of living. And then there's also an interesting kind of small thing is that you'll get a deduction for auto loan interest if you buy a United States made car.
Right. So the bottom line is, and this is why we're excited about it, is all of us are going to pay less taxes. Our taxes aren't going up, they're going down. We're going to pay less taxes and get to keep more of our own money. And we think that's good. We know that's good. It's always better for us, American citizens, to spend our own money rather than the government spending it for us. We're better at spending it than the government.
Yeah, and that's also better for the stock market.
Right.
And the economy as well, when individuals are spending the money rather than the government choosing where it goes. So, to preview what we're going to talk about in our next podcast, the part 2 about the big beautiful bill, we're going to be talking about some estate and gift tax exemption limits that are changing in a good way. and savings for children and grandchildren, options of how to save for children and grandchildren, some new options and some things that are changing with the current options, and then also some changes that are going to be made for businesses and corporations that we think are going to hopefully benefit small businesses, but also benefit the stock market and the corporations on the stock market.
So all of this stuff that's in this big, beautiful bill is going to benefit individuals and the economy and the stock market, and that's why we're excited about it. And we're not excited about it because we're Republicans or Trump fans or anything like that. We're professional financial planners, and these things are going to make it so that people are going to get to keep more of their own money, and that companies are going to be taxed less. And so that's going to increase their values and increase your investments. So we're excited about this, and the future looks bright. So anyway.
All right, stay tuned for part 2, and hope you guys have a great week.
Thank you.